I'd like to welcome everyone to today's webinar on the new wage theft laws, which were introduced early last year. My name's Matt Schaefer. I'm a business service principal for Forsyths out of Armidale, and I've drawn the short straw, I guess, and I'm hosting today's event. Wage theft has been in and out of the media lately, including recent scrutiny of Coles and Woolies, which has led to this session being really popular with our clients. We've got a great registration as a result of that. We've got attendees from a wide range of industry, including agri, retail, hospitality, professional services, aviation, disability and support services, as well as some local government. Here at Forsyths, we aim to blend our expertise and connections with leading city firms using our heart, integrity and understanding that can only come from being truly local. To do this, we maintain a few trusted relationships and connections, and one of these is Cowell Clark Lawyers. We've been regularly partnering with them over the last couple of years to provide valuable expert advice and guidance for our clients. Obviously, we'd like to be the experts in everything that we deal with, but to be quite frank with you, there's better people than us out there, and that's why we have these connections. Today, I'm really pleased to introduce our presenter, Cassie Burfoot. Cassie is a director at Cowell Clark's Employment and Workplace Relations team. She's a specialist employment lawyer with extensive experience advising clients across all aspects of the employment relationship. Cassie will take us through her presentation, which will run for about 35 minutes. Following that, we'll have a Q&A. I'll try to answer as many questions as we can and pass what I can over to Cassie. Obviously, she's the expert here, so feel free to type your questions into the meeting chat at any time, and I'll try to put them together as we go. Now, I don't want to steal any of Cassie's thunder, so Cass, I'll just pass over to you. Please let us know how you go and how you'd like to run today's session.
Great. Thanks so much, Matt. Thanks to the Forsyth team for having me today and for everyone for joining as well. Just to add some extra context to sort of where I fit in and why I feel like this topic's so important for us all today. So I've been practicing in employment law for about 15 or so years now, and I would say for a long time, wage theft and underpayments and award classifications and all these sorts of queries, they would be very, I would say, minor queries that would come through. They would trickle in and they'd be on a very discrete point, and then we would sort of give some quick advice, and then employers would run away with it. And pay reviews and things like that just weren't a big part of the work that we did. That's changed completely. I'd say in the last 6-7 years, 75% of my practice has now become wage compliance work. So still do all of the usual run-of-the-mill employment front-end advice and litigation work, but now I've got a team of 4 people where this is a huge part of our day-to-day work. So if we just bring up the slides to share with you all now. So we're going to be speaking about wage theft crackdown. So wage theft was a term that for a very long time used to frustrate me. It was one that unions would often bandy about, and I can say again, in all of my time of practice, I've never had a client come to me and say, how can I underpay my staff, or how can I get around this very clear obligation? It's quite the opposite. Usually people come to me and say, how can I comply? How can we make sure we're squeaky clean? And issues come up. How do I get this cleaned up for my employee in particular, and also to satisfy the Fair Work Ombudsman? So wage theft used to really annoy me, but now in the last year or so, it's actually just become its own category of underpayment law. So when I'm talking about underpayments, again, for some further context today, I'm not talking about sort of whether someone had an employment contract that promised a really exorbitant wage and whether we've met that or not. When the Fair Work Ombudsman is talking about or looking at underpayments, what they're looking at is, has the employer complied with the relevant award or the Fair Work Act? Those instruments and enterprise agreements as well set minimum entitlements. So we're really looking at, have the minimums been met? And that's not just limited to hourly rates. That's things like allowances, penalty rates and overtime that might get missed along the way. So in terms of what we'll be covering today, just at a high level, I'll take you through the legal framework relating to underpayments. It's changed quite a lot, particularly in the last few years. I'll also speak to the Fair Work Ombudsman's increased compliance efforts in this area. I'll provide a summary of the new wage theft laws that commenced, as Matt mentioned, at the beginning of last year. I'll speak about some common payroll errors that I see coming up that are creating a lot of the legal risk in this space. I'll speak about how we can help. No point giving you the doomsday spiel without a solution. So we've got a lot of ideas on that front. And I'll also give you a quick introduction to my pet project, which is a service that we offer called RemCheck. So that's sort of just a very high level what I'm planning to cover off. So to dive right into it, we start with the existing underpayment laws. So for as long as the Fair Work Act and the Workplace Relations Act has been around, and all of its predecessors before that, we've always had sections in there that talk about underpayment. So the idea that an employer must pay an employee any amounts that are due to them in full, in money, and at least monthly. So a couple of comments there. The in money part, you would think that that's obvious, but we have had cases where people have tried to pay with meals and other entitlements along the way to say that covers off on wages. It won't. The requirement that it's paid at least monthly, the caveat to that is that sometimes awards and other instruments will require more frequent payment than that. So what the Fair Work Act does is set just these really broad parameters and says you've at least got to do these things. And there's been a massive increase in penalties in this area in the last little while. So probably less than a decade ago, the maximum penalty for a breach of just this general payment obligation that employers had was about a maximum penalty of around $33,000. And it didn't distinguish between smaller and larger businesses. That was the maximum no matter how big you were. But in recent years, we've seen a split occur. So now there is a distinction between smaller employers and larger employers, as I've included on the slide. So now if a business fails to pay an employee in full, in money, and at least monthly, or otherwise as per their instrument, they could be up for, if they're a small business, up to $99,000 per contravention, or $495,000 per contravention for a larger employer. And the scary part in all of this is the words per contravention, because if you think of a workforce, say of, let's not be unreasonable, say you've got a team of 10 people, they each have an entitlement to be paid in full. And if your pay period is fortnightly, arguably there are multiple contraventions occurring every pay period. And now the court does apply certain principles when sentencing to join similar contraventions, but it's really important to know that things can add up quite quickly the more issues that there are. Then another feature and long-standing feature of underpayment laws has been the idea of personal liability. So a person who's involved in a contravention, so someone who might be involved in the underpayment directly can be personally liable. So I'm seeing about 80 to 90% of Fair Work Ombudsman prosecutions, including an individual being named as a party to an underpayment case. So it will be Cassie versus Cal Clark and named individual, as that's the case name. And so the named individual faces a maximum penalty of $19,800 per contravention. And I've underlined on the slide there the most common way that individuals get roped in here. So where they are directly or indirectly knowingly concerned in or party to a contravention. Again, cast the net very, very wide. But basically, if someone knows about the material facts that lead to a contravention and they are certainly didn't stop it, and they're seen to be, I suppose, a consistent theme or participant in the contravention that ultimately occurs, that's where personal liability can arise. So you can imagine it's quite often directors of companies where they're quite close to pays that are set or other practices. They might be have a view on overtime or penalty rates and not paying those in particular circumstances. So if they're found to have been involved in that decision and that's a breach of the award, they can get caught here. Again, the net gets cast very wide. There's been cases where even bookkeepers have been roped in under this section. It's section 550 of the Fair Work Act, where The bookkeeper, the case was called Blue Impression and Easy Accounting 123. It came out in about 2017, and there was an appeal after that. But the bookkeeper knew that their client had been in trouble with the Fair Work Ombudsman or been audited before for wage issues. They also knew that they received instructions which on their face were very low rates being applied to very unsociable hours of work, so long hours or hours, that would ordinarily attract penalty rates or overtime, and they processed the pay purely on their client's instructions. So they ended up getting caught up as being personally liable in all of this, and they ended up receiving a penalty of over $50,000 for their involvement in their client's breach. Now, in terms of how the Fair Work Ombudsman recovers wages, so they've been notified or they've discovered an underpayment, they've got a whole host of ways that they can then recover the entitlements that they're concerned about. They've actually published, and it's readily available online, a compliance and enforcement policy. And in my experience, they will quite diligently work through that when they receive or become aware of an underpayment matter, and apply the facts to the different options that they have in that policy and come at which is the best one for the circumstances. So they say that they do a lot of cooperative recovery. So that might be where someone self-discloses or they reach out to after an employee tip-off, and they get in touch with the employee and the employer, I should say, and the employer back pays the amount promptly and there's no further issues. The Ombudsman also and frequently issues compliance notices. A few of my clients have received them where they've formed a view that there's been a breach occurring, and the compliance notice requires rectification at the workplace level. Enforceable undertakings are a big tool that is used in this area. So I'll give you some case examples in a moment, but effectively that's where the employer signs up to a written and public agreement with the Ombudsman that it will do or not do certain things going forward. And it has to have satisfied the Ombudsman that they've got all the measures in place and learnt their lesson effectively, that this can't happen again. And the last and most obvious one is litigation. That is always an option available where the Fair Work Ombudsman decides that it's appropriate in the circumstances to prosecute. So we've had these underpayment laws forever and a day. We've had these options to enforce forever and a day. However, it wasn't working. So in 2017, the Fair Work Act was amended. It was part of the Protecting Vulnerable Workers amendments, and a new layer was added called serious contravention. So this is the idea where if a person or business knew they were contravening workplace laws, or they were reckless as to whether the contravention was occurring, those maximums that I referred to earlier, they will get multiplied by 10. So we're talking about if an individual gets caught under the serious contravention laws, they're up for a maximum penalty of $198,000 for their involvement. We've got smaller businesses would be up for $990,000 as a maximum for a contravention, and larger businesses in serious contravention territory are looking at $4.95 million as a maximum penalty. And in cases where you actually can't work out what the underpayment value was, maybe because the records are so bad, the other option, that's where they would apply the maximum of $4.95 million. Or they'll look at 3 times the amount of the underpayment if it is capable of being bedded down, whichever is the greater of those two figures. So they're not by any means small numbers. The first case that came out of the serious contraventions laws was one involving a business called Hans Cafe. It was operated by an entity called Tack Farm Pty Ltd, and it was the first, as I mentioned, the first case under the serious contraventions provisions. The employer had a previous indiscretion. So in the 2014-2015 financial year, they were found to have underpaid staff at that time, and they admitted liability back then. And in 2018, they got issued with a penalty of $37,000 for that old breach. In 2018, again, the Fair Work Ombudsman happened to be conducting a national compliance monitoring program. So they go back to Hans Cafe and have a look at their records and audit them, and they find that they've underpaid staff yet again, this time only in the amount of about $5,111. However, the Fair Work Ombudsman took the view that the employer obviously hadn't learned their lesson. They got really annoyed by the general manager of the employer, who said, "Why are you auditing us already? Why are you back so soon? You haven't even let us get our house in order." That didn't go down very well. So where all this ended up was in court. Applying those options that I set out before, the Ombudsman decided that litigation was appropriate in the circumstances, and the court, notwithstanding that the underpayment amount was only just over $5,000, they issued penalties of over $230,000 collectively. So that was made up of about $38,000 in penalties being issued to the general manager, I should say, in his personal capacity, and the balance was by the company. And that's a common theme that I see in these areas. It's that often the penalties are the sting in the tail. The underpayment amount is kind of just one interesting factor in all of it, but all the surrounding conduct and all of the other issues, and then you couple that with the maximum penalties that are available, more often than not, the penalty will far exceed the actual underpayment amount. Another example of compliance and enforcement in this area, very recently in South Australia, only about a fortnight ago, one of our big SHADS providers over here is called Uniting Communities. They were discovered to have underpaid staff $2.6 million and it affected about 1,500 employees. So they had self-disclosed that to the Ombudsman in 2023, and they found that the cause of their underpayments was that they had been misapplying their enterprise agreement, and that can be either an interpretation or the payroll system, but also that they just had a shoddy payroll system as well. So that led to $2.6 million owing to staff. And in this case, the Fair Work Ombudsman formed the view that United Communities was very cooperative and very remorseful for its conduct. And so they, rather than going down that litigation route, notwithstanding that the amount was so significant, they were happy to enter into an enforceable undertaking. And enforceable undertakings they're a double-edged sword. The benefits are that you're not going to court, you don't get all that adverse publicity of being in litigation with the employment regulator. It also means there's a level of, you don't have the legal spend and all of those sorts of things. The downside to an enforceable undertaking, though, is that they are just as time consuming in my experience, and you're on the Fair Work Ombudsman's radar for quite some time. So you'll see on the slide here, the enforceable undertaking that got entered into by United Communities, it required them to finish a full-blown pay audit and report the findings to the Ombudsman. So again, you're having to run back to the regulator and tell them any other errors that you've picked up, which isn't great when you're already on the hook for an old error, like that Hans Cafe case I just took you through. They had to put in place systems and training. They had to run a hotline for employees to report wage issues, and they've got to periodically report to the Ombudsman. So a lot of upside, not going to court, not going through all of that uncontrolled and uncontained sort of space of court-ordered penalties and media and all those sorts of things. But I don't envy the people and culture manager and the CFO and CEO at United Communities at the moment. They will have a hard project ahead of them to get to the other side of this undertaking. So it's one where we always give really careful advice when it's put on the table of whether it's worth it and whether it's sustainable. More often than not, the answer is yes, but we just need our clients to understand what they're signing up for. Another enforceable undertaking that I wanted to mention was in relation to a Goulburn Valley fruit growing company called RJ Cornish. So they'd been found to have made this one actually, there were wage deductions that were totally unlawful. So deductions is such a tricky space in my area. So you can't just reach an agreement with an employee that you'll deduct wages for certain reasons. There's all these principles in the Fair Work Act about when deductions can be made, and principally they need to be for the employee's benefit. So it's when you withhold things, amounts for salary sacrifice or voluntary super contributions, that's when you might make deductions. But in this instance, we had an employer who was effectively charging employees for the use of power ladders, fuel, and repaying money for damage that they'd caused to sprinklers. So the Ombudsman found out about this by doing one of their nationwide surprise inspections at a farm. They went through a whole range of farms, and at this particular one, they discovered this practice was in place and that it had been going on for some time. But RJ Cornish, to their credit, were, as I understand it from the materials, very cooperative, immediately backpaid the funds. They made a contrition payment to the Commonwealth Revenue Fund, and in that instance, the regulator was content not to litigate, but instead they were happy to sign up to this enforceable undertaking. But again, they've had to sign up to HR and payroll training. They made that contrition payment that I mentioned, and they've signed up to a full-blown independent audit regime, which can be really expensive and time-consuming. So again, something to weigh up. By comparison, we had the Lotus Farm case. So the Fair Work Ombudsman in this instance was tipped off by 2 former employees that they were receiving really low flat hourly rates. They were pickers and packers at a tomato and cucumber farm. And when the Ombudsman approached the employer, it was discovered that those employees had been underpaid about $28,000 collectively. And that related to things like minimum rates weren't high enough, but they also weren't paying casual loadings, overtime, public holiday rates, all sorts of things. So it all added up to $28,000 odd. But I think the problem here was we had 2 very vulnerable workers, non-English speaking, to start with. So in this instance, where the Ombudsman has applied their compliance and enforcement policy, they've decided litigation is the appropriate response in the circumstances. So the Federal Circuit Court ended up ordering penalties again, notwithstanding it, there was only $28,000 in total of an underpayment. The company was ordered to pay a penalty of $130,000, and one of the directors, who was found to have been, I suppose, the mastermind behind the wage arrangements that were non-compliant, they were personally penalised at $28,987. And those examples weren't hard to find. There is a lot of activity in this area, and that's demonstrated by this graph that I've put up on the slide for you. So early on, well, I should say, sort of 10, 15 years ago, there was activity in this area, but the Fair Work Ombudsman was guilty of being like a lot of regulators, where they've got a lot of power, but they weren't actually exercising it to its full extent. But around 2018, we had a new Ombudsman commence. Her name was Sandra Parker, and she was quoted in the Fin Review a couple of years ago as saying when she took the reins, she wrote to all the top 100 listed companies and to their boards and said, I've got these laws and these powers. I'm planning to exercise them. Your boards need to be assuring themselves that you've audited your payroll, that you're up to scratch. And she said the self-disclosures from a bunch of companies started to flood in. So we had, in the low 100 millions in 2020 being reported, through to in the 2022 financial year, we had $530 million in back payments that were recovered by the Fair Work Ombudsman's efforts. And then the most recent round, so in October last year, the Ombudsman put out a media release that said they'd recovered another $358 million just last financial year alone. And so over the last 5 years collectively, they've recovered about $2 billion in unpaid entitlements. So on top of all of this, litigation is becoming a very popular tool with the regulator. So a few years ago, we had them recovering, less than sort of $5 million in court-ordered penalties over a year. Then we come through to the last financial year, there was a record $23.7 million in court-ordered penalties. So that's on top of the back payment amounts. So again, they're not frightened to use those tools if they need to. But what all of those figures tell me is that despite that underpayment framework that I told you about at the start, and then the escalation in 2017 with those serious contravention laws, none of it obviously was working. And there was a fear with the legislators that employers in Australia were sort of viewing underpayment and penalties in this area, because they were previously quite low, as just the cost of doing business. They were willing to take on the risk and take a punt and have a really profitable business because they were paying in a certain way, or even perhaps not turning their minds to what entitlements were due to their staff, and then ending up in the situation where they would get a penalty and so be it. I know that's not a luxury that a lot of businesses have, but you can imagine that there are some who were repeat offenders and they were willing to take this on. So in the last few years, there was a lot of discussion in Parliament about how do we take on this issue. So we had the underpayment laws, as I mentioned, in the blue square. We escalated to the yellow square of serious contraventions. And then a decision was made in the last few years that we need to sort of sharpen the stick and make it a separate category. And we will start using the term wage theft for certain employers. So where there's deliberate and dishonest conduct, there's now going to be criminal liability for those that fall into that category. So in terms of what the wage theft laws, they started, as I mentioned, at the beginning of last year, but their penalty is really important. So the maximum penalty for an employer who's found to engage in wage theft is $7.825 million, or 3 times the amount of the underpayment, whichever is the greater figure. And for any individuals that are found to have been involved in wage theft, the maximum penalties are 10 years in prison, $1.56 million in penalties, or 3 times the amount of the underpayment. And when I made that comment before about regulators sort of having powers and not acting on them, there are a number of those that I could point to. The Fair Work Ombudsman isn't one of those. So within days of those laws passing and before they commenced, I saw on LinkedIn a job ad came up immediately for inspectors who would be specialising in criminal wage theft at the Fair Work Ombudsman's office. So that was really a sign that they were going to get onto this quite quickly. It wasn't something that they were just going to have in their war chest and maybe look to if the situation arose. They've actually got people who their job is to seek out wage theft. Now, in terms of what the elements of the offence are, I want to break them down. So there's 2 key elements. The first one is that the employer was required to pay an amount to an employee. It's pretty uncontroversial. So that will stem from an award or an enterprise agreement or the Act. The first element will be proving that someone was entitled to, say, overtime. The second element is that the employer intentionally engaged in conduct which resulted in their failure to make the payment in full on or before the day when the required amount was due. So the underlined point is really important here. We're not looking at employers who engage in an honest mistake. They will still be captured by those other areas or those other categories of laws that I mentioned earlier. Honest mistakes do get caught with general underpayments. However, when we're looking at wage theft, given the seriousness of the penalties, we are really focusing on those true offenders in the sense that they knew that something was due and that they chose deliberately not to pay someone that entitlement. So the way they work in practice is that the Fair Work Ombudsman would refer a matter off to the DPP or the AFP if they suspected, so one of those inspectors that I mentioned, if they suspected a case of wage theft, they'd prepare a brief and send it off to one of those be it prosecuting bodies. And then the prosecution will need to prove beyond reasonable doubt that the employer intended to engage or an individual intended to engage in the conduct that's been alleged. So all of it makes clear that we're really looking at intentional issues. Even in the explanatory memorandum, the examples given that say if an employer is found to have known that a person was due $30 an hour, and that's because they might have a subscription service to something that sends them out wage increases, or because they've written it in the contract, or they have a sophisticated HR body, but they choose to pay someone $25, that person's going to get caught by these laws potentially. However, if there's an employer who genuinely misunderstands that an instrument applies or applies the wrong classification, and there's enough evidence to support that, they'll likely more fall into the underpayments or the serious contraventions that I mentioned earlier. But the question then becomes, how do we establish intent? How does a company, an employer, show that it intended to underpay staff? or that it didn't, more importantly, for our purposes. So the legislation says that this will arise where a board member or higher managerial agent, so someone whose duties show that they've got decision-making power in relation to wage issues, where it's shown that they intentionally, knowingly, or recklessly carry out the relevant conduct. Secondly, where there's a corporate culture that exists, so that leads to non-compliance. So where an inspector comes in and looks around and asks for certain policies, or asks to look at pay data, or asks to look at contracts, and they start to think, we've seen an email between staff which says under no circumstances, even if people work the hours, don't pay overtime. That could be caught by a corporate culture that directed, encouraged, or tolerated, or led to non-compliance. And the third category is simply where an employer fails to even create a corporate culture of compliance. So that's a really hard category, I'll say. It's much easier to be proactive in this area compared to, I've had cases where an employer has had an issue come up, and I've said to them, great, when do you give training to your payroll or HR people, or when was your last pay review done? And we find ourselves doing word searches in inboxes, and we're trying to cobble together a case. But the better scenario, certainly for my sake, and it would be for all of yours too, is where we can quite calmly and easily point to, oh, it's a yearly agenda item for our board that they want to hear from people and culture how we're going with our pay compliance, or we've got a policy that applies when someone raises a wage issue, or so-and-so has been entrusted with the role of keeping an eye on Fair Work Commission updates and updating our rates of pay. So that's a much, that will show that there is no intent to underpay. Whereas when you have nothing, or when there's evidence of directions not to pay staff, or a lax attitude towards this area, that's where intention can be imposed on an employer. And just a couple of quick quotes, but the main one that I think is important is the Criminal Code talks about corporate culture as an attitude, policy, rule, or course of conduct or practice existing within a body corporate. But when the Financial Services Royal Commission had to look at corporate culture for their purposes, they call it what people do when no one is watching. And I say to my clients, often, obviously, pay compliance is what we want for staff. We want them to get what they're owed. We want it to be an employer of choice, but we're also doing it for the event that one day a regulator or an inspector knocks, that we're ready to pull everything out and show them what we've been doing. So if there is an accident, it couldn't be because it was intentional. So we then move into one of those lower categories where hopefully it's a much more minor matter, or it's one where they're happy to deal with by way of a cooperative recovery and no further action is taken. Common payroll errors in this area that I see are misunderstandings of the applicable instrument. So often there is a misunderstanding that a particular award applies, or how to interpret a particular section of an award. An incorrect classification can be applied. So sometimes you might call an employee a level 3 when they should have been a level 5. The result of that is that you've been applying the wrong minimum rate to their hours of work. So there could be an underpayment there. But the two that I really want to focus on, because they come up most commonly, I would say, where the pay rules within a pay system are incorrect or out of date. And secondly, where there's an incorrect approach to set off. So getting into pay rules and the errors that come up there, on one hand, it's about making sure your rates are all accurate. 1st of July every year, Fair Work Commission releases new rates, and the Fair Work Ombudsman puts out the pay guide that comes with it, so you can update rates, keep an eye on the award, that's all great. But there's a lot of case law that sits behind awards and instruments. So for example, the example I've got on the slide is from the General Retail Industry Award. They've got a clause, I'll focus on the first example, that says an employer must not roster an employee to work ordinary hours on more than 5 days a week. And it's said that overtime applies if that clause is breached. It doesn't tell you which days it applies. Does it apply on the 6th day forevermore until you get the necessary break, or is it just one breach day? Doesn't go into that detail. But there are cases that me and my team know about and other employment lawyers would know about that talk to that exact issue. So if the pay system doesn't reflect all the stuff sitting behind the scenes that the Commission didn't include in its drafting when it wrote the award, that causes an issue. And also, who's an employee? I've underlined the word employee there. We had a case a few years ago where we did a pay review, and our client used a payroll tech platform that's come out, and they applied overtime to every employee in the organisation where this rule was triggered. But it was when we saw the results, we could say, well, actually, did you know there's a case from a few years ago that says that this only applies to full-time employees? This rule doesn't apply to part-timers or casuals. The award doesn't say that, but the court has agreed that that's the correct interpretation. It saved our client in $500,000 in overtime that they're about to back pay that they didn't need to. So there's a whole lot of interpretation and behind the scenes stuff in this area that should be informing pay rules. And if it comes up later in pay reviews and when investigations occur, but really getting front-end advice on what rules should be applying and how they apply is really important. The other issue very quickly is set off. So I've got an example on the slide here where if an employee is just paid a fixed amount of, say, $1,000 a week, but their entitlement strictly under the award was $950 in weeks 1 and 3, but $1,050 in weeks 2 and 4. In both scenarios, they're entitled to $4,000, but on a pay period basis, and that's the approach the Ombudsman has long agitated for. And I've received proactive letters from them in pay reviews before where they said, before you even get started, just know that we're looking at a pay period compliance review. Pay periods 2 and 4 are technically breaches of the award. So even though someone has been paid their $4,000 entitlement, they would technically be entitled to $50 per pay period, so $100 total on this example. And where this has come up, again, it's something that I used to frustrate a lot of clients and pay platforms with when I would say, actually, the strict approach is pay period compliance. The Coles and Woolies decision a lot of us would have heard about last year. It was squarely on this issue. So in September last year, the federal court handed down a decision where they said for all of Coles and Woolies salaried store managers who were getting a salary much like the one I just described, to the extent that any pay period resulted in them, because it might have been Christmas or other busy periods where they've had to work longer hours, were there ever any pay periods where that $1,000 notionally wasn't enough to cover the hours worked, even if over the year they were better off, that was strictly an underpayment event in those busier periods. So while Coles and Woolies, I should say, said, why can't we pool the money over a year or over 26 weeks? And as long as someone, when you pull it all together and measure up against their entitlements all collected together, as long as they're equal to or better off, that should be enough. But the court said that's not how particularly the general retail industry award works. It doesn't refer to salaries, so you don't get to look beyond pay periods. And the outcome of that is that now it's current law. So it's going to be appealed, but we have that's my advice now to any employer in this area that's asking about, unless there's a specific award, enterprise agreement or contractual arrangement in place, it's an area where this is the law until it's overturned by the federal court. And just to quickly wrap up on this before I give you a very quick intro to RemCheck, the current priority areas for everyone's purposes, and we were just saying before the session, this actually aligns very closely with a lot of our attendees today. So the Fair Work Ombudsman, each year they publish the sectors that they're going to be focusing on because they deem them high risk. So it's aged care, agriculture, building and construction, disability support services, fast food restaurants and cafes, and then large corporates and universities. So they really cast the net wide, but what they do is they say that they're going to conduct spot inspections. They roll out a lot of training and education in these areas, but also they're the ones that they see coming up most commonly with their litigation efforts too. So in terms of how we can help, there are light touch options. It's sometimes that we get contacted and asked for advice, a bit like what I said historically, would get asked for very discreet award coverage or classification advice. But then there's more greater support that we can provide. So if we often get an export from a payroll system of the payrolls that are sitting in behind the pay processing and rostering, and we can approve them and confirm that they're legally compliant. We can provide written advice and briefings to boards and management on their obligations, and we do that quite frequently. And the other option is payroll review via RemCheck. So RemCheck is a service that we offer where it's all data driven, and it's where we compare what should have been paid to employees against what they actually were. So just again, very quickly, because I do want to leave some time for questions and answers. RemCheck, it's a service, a Cal Clark service. So it's not a product that we package up and give you to run away with and use, and it's certainly, we're not performing payroll function for businesses. What we do, it's all data driven. So we have a whiz of a data person, engineer behind the scenes who works with us, and we ingest your pay data from your payroll system and all of the time and attendance data, and we effectively rerun your payroll daily and hourly, and we can line up where there are overpayments and underpayments. So it's a comparison service effectively. But importantly, that's the type of calculation that the Fair Work Ombudsman expects you to produce if you're ever subject to an enforceable undertaking, audit, or any other inquiry. It is that comparison to make sure that what you've done stacks up with what the award or other instrument says. And it's a great service because it's got employment lawyers. I mentioned that example with the $500,000 we saved our client previously. If we weren't involved in that project, they would have been, much worse off on their P&Ls than what they were at the end of that exercise. Privilege is really important in this area. It means we can keep everything confidential between us about draft calculations and what different scenarios look like and levels of risk we're willing to take in terms of interpretations. If it's not done with a lawyer involved, all of those draft calculations become discoverable and need to be handed over to the regulator. And we also provide ongoing support. So it's not just give you the figure and all the best. We help you with self-disclosure, and we help you with communicating with employees and all those things. But very quickly, stage one is we work on your payrolls with you. So we end up turning a 60-page award with a whole bunch of irrelevant clauses to your particular operations into a document that's much shorter and looks like this. You don't need to see the text on screen, but it's effectively a summary of what the key provisions are and how we say they should be applied. And then we run the calculation. So that's, again, we have an engineer who's developed the calculator, and it includes very comprehensive modelling where we turn all of those rules that we've landed on into formulas, and we work out, it automatically will pick up in the data when those different rules are triggered, and it works out the hierarchy of rules, because sometimes, say, if overtime applies and penalty rates won't, and vice versa. So it speaks to all the different layers of compliance and worked out which is the most appropriate penalty that applies. And then it plots all of your data in a way that looks much neater. And again, you don't need to see all of this in close detail, but we turn really ugly back-end payroll data into a day-to-day, hour-to-hour schedule. And as we scroll across, again, I appreciate this is not great for this format, but I really want to show you the end slide where we end up, that we can show people that over the whole review period, you are down $501 in terms of pay for hours and 80 cents off for allowances. So not a bad job by any means, but there's an underpayment there. And when you extrapolate that over a big cohort of staff, we're able to then show the Ombudsman or employees, hey, there's a back payment owed. It got triggered by this rule on this day. This was the issue that caused it, we think. Here's the amount we've landed at, and here's proof of payment. And so much in this area, and I think a real key strength of myself and my team is the way that we present data and our findings, because you can imagine that if you give really rough and ready calculations, or if you don't have really plausible explanation for why you've interpreted a rule in a certain way, the risk is that the Ombudsman looks at you and goes, you can't be trusted. There is a real issue here, and I don't think you're taking this seriously enough. Whereas if you get a product that looks like this, they can see the time, the thought, and the investment that's gone into it. And we've had a lot of success. I think our best one, we had a client with a multi-million-dollar underpayment matter that we helped them find. We gave them a lot of advice about our concerns that they were going to be litigated or have an enforceable undertaking put to them. We handled that matter in a really professional and really clear way in terms of how we had found the issue and what we'd done to fix it. And because it was a first-time offence, our client got a closure letter that said, effectively, don't do it again, and you're on our radar, but we're not going to be taking any further action at this time. But given some of the figures I've shown you earlier, I dare say that they didn't have that type of representation or carry themselves in that way that the Ombudsman felt they could trust those employers, so they ended up litigating or putting them through an undertaking. And the final results get produced in a board-style paper like this, where we can work out by employee where the underpayments come from, what's been the trigger, and overall what we're owing to people at a bigger quantum level, as opposed to individuals like before. That was an individual calculation. And I suppose you might be able to tell from this, I'm very passionate. This is one of my areas where I believe in it quite strongly, because there are some areas of law and other lines of work where I feel like it's a bit of a watch and see approach, and the investment and everything else just seems really tricky and overwhelming. So it's almost like you're hoping to kind of stay out of trouble and hope it doesn't come up, because it's a lot of front-end investment for, potentially not much reward if it doesn't come up as an issue. Whereas this is an area that I find you can get it right with good advice. So it's a lot of front-end commitment, but it's very easy to maintain this area and much easier to keep an eye on it and manage it, rather than that cobbled together approach that I spoke about earlier. So I do believe strongly in it, because I think it's one where we can work with people and get them in a really good spot and in a really defensible position if they ever were to be approached, and to be able to then demonstrate, like the laws require, that they weren't intending to underpay if a wage theft claim ever came up. So that brings me to the end of my formal sort of slides, and I know Matt was going to rejoin for some questions at the end there.
Yeah, thanks, Kathy. Great presentation. There's so much in that. You're obviously really knowledgeable and passionate about it, as you say. And to me, that was a huge eye-opener. Those maximum penalties are massive, and there's so many ways we can get this wrong, with intent or without, right? So I guess we do have a couple of quick questions, and we've probably got about 5 to 10 minutes to run through them, if you can stick around for that. And
of course,
if you've got it, if the attendees have anything else to add, please type it in while we go. But the first one that's come through is, what sort of clients do you mostly deal with, and how does the engagement normally come about?
I think I would say that most of our clients in this area are probably my sort of existing employment law clients who might come in on a contract job or something else, and this teases out. But I would say we've got a lot of agri and shads clients in this area, a lot in the building and construction space, and aged care is emerging. Retail has been a big one. So I wouldn't say that we have any particular focus areas, but they're the key industries that we're serving. And often it can be, as I said, those internal kind of, I'm helping someone with a different issue and it pops up, or they might show interest. I think one of my favourite stories to tell at the moment is I presented at an aged care function recently on pay audits, and someone stood up and said, great presentation, but I don't know why you talk to us about it, because our staff, we're all good here. That organisation has now signed up for an audit project with us because they've had an issue pop up in the days after. So they come up in all sorts of different ways. And then others is bookkeepers and accountants will often refer to us because you're all trusted advisors as well, and you'll have a business call you and say, I've got this pain of an employee who's telling me they're owed such and such an entitlement. And when we hear about it, we go, we better take it seriously. Let's look into it for you.
Yeah, right. Yeah. I guess the reason I like that question to start with is, thinking about our client base, and, we're not experts in it. So just when we're looking at a set of financials and tax returns, doing our normal compliance stuff, even our bookkeeping stuff, we might not pick that up. So just looking for ways where we can trigger it, so we can go, you know what, let's get in touch with Cassie and we can go from there. What other entitlements are you seeing employers get wrong? Is there anything we can go over just quickly?
Yeah, I think the big one has been overtime or penalty rates. So they're often things where clients will say to us, well, I pay decent salary, so I've never worried about those things. I figure it's all covered in there. I gave that example earlier, though it's probably not a true accounting sort of exercise or that better off overall assessment. You've really got to extract each entitlement out and make sure it was covered off. So I would say overtime and penalty rates, but also set off arrangements are a big area where people had long thought if they had that kind of 3 or 4 sentence clause in their contracts that says, if I underpay anyone, look at my overpayments and chuck them off against each other and I should be okay. That Coles and Woolies decision said, actually, you've got to be a bit more finesse than that and look at a pay period basis.
Yeah. Yeah, we were just kind of talking as you were presenting that about the pub test and,
yes,
you know, while it might sound like it passes the pub test, to the letter of the law, it obviously doesn't.
And we have had employees come back to our clients. I actually think that one of my clients, we had set up a full-blown sort of hotline for staff to come through with questions about back payments they received, and we were expecting them to really scrutinise whether there was more they should be owed. But the overwhelming questions from the few staff that came in were, why am I receiving this? I already get a salary of $100,000. Why am I getting a payment for a first aid allowance or things like that? And it's because the contract had never contemplated the allowances that were due. So I think the pub test is interesting, and often employees are the ones that kind of say, do you really need to pay me that? I don't think it's due. But when the Ombudsman's hovering, we do.
Yeah, just got one come through online here from Margaret, and I don't know whether you would like to answer this or not, but she's asked, does the New South Wales Farmers Industrial Relations team have similar knowledge and skill set to you guys? Have you got any experience with them? Or
I actually, and very coincidentally, probably in the last 6 weeks, we've had to give advice to a beekeeping operation that had received advice from the same organisation, and I think they were able to give them really sound high-level advice, but often with, and it's not to be critical at all, but often it is that introductory level advice before a full-blown that you get referred off to a lawyer for very specific advice on particular arrangements. So I saw that client in that instance get, I suppose, tipped off to an issue that did need some further expert advice. So I think that they would know in broad what's going on in the area for sure.
Yeah, cool. Right, and probably the last one before we have to wrap up for today. When an employer identifies an underpayment, what are the next steps? Are they required to report it to the Fair Work Ombudsman themselves?
They certainly, there's nothing in the Act that says you need to go and self-disclose. So that's always the starting point of my advice in this area, is we don't have to. But I mentioned a couple of times that compliance and enforcement policy, and that gives us 2 really good tips in this on this topic. So the first one is that it says that if an employer self-discloses, that they're less likely to be litigated. So they're more likely to be viewed as a cooperative employer. So they probably come down that scale, move further down the chain of those options that are available. And they also say in that policy that if the underpayment was quite contained, was over less than 12 months, and that it's already been quickly and easily remedied, that they're not expecting a self-disclosure in that scenario. So it really just becomes, I think, if it's a small and contained issue, the Ombudsman, my experience is they're swamped with this stuff. So they're trying to say anything below this threshold, leave us alone. We're okay. We've got other stuff to do. But above that, they're saying, if you do, we know you don't have to, but if you do, we're less likely to sue you, frankly. So I think we give a lot of strategic advice in the area of whether we think it's a good idea or whether we continue on and adopt a watch and see approach.
All right. Well, thanks, Cassie. That's all of the questions that we've got come through. Obviously, if there's any other questions, we'll try to get a feedback form out and circle those questions back and see if we can get some responses out to the attendees. Another massive thank you for your time today, Cassie. Your insights are invaluable and, like I say, real eye-opener. I got a lot out of today, and it's been a pleasure working with you through this process. So I guess for our attendees, like I say, we'll be sending out some contact details for Cal Clark if they think that it's the right thing to do to contact you directly. But obviously our principals and accountants here at Forsyths will be able to support you where we can. And, you know, should we need to, we'll escalate that up to Cassie, who obviously knows way more about it than we do. So Cass, have you got any follow-up words or anything that you just want to wrap up with?
I'm just grateful for Forsyth's putting this together, and thanks again to everyone for attending. And as Matt said, if you ever want to reach out, I'm very happy to talk about this stuff. Even if it's just that initial chat, if you're just trying to soundboard an issue, always here. So yeah, very happy to help.
Perfect. Well, thanks, Cassie. Thank you everyone for your time today. As you know, Forsyths have been trying to put out a few webinars in the series. So if you've got any suggestions or any questions, please shoot them through to us and we'll see if we can accommodate that in the coming weeks and months. All right. Thank you very much. Thanks, Cassie.
Thank you. Thanks.